There's a psychological trap that has cost Bitcoin skeptics millions, and it repeats at every price milestone. On November 27, 2013, when Bitcoin crossed $1,000 for the first time, thousands of people declared it was too late to buy. The sentiment was everywhere: forums, comment sections, financial media. The price had surged from $13 at the start of that year, and the consensus was clear: you missed it. 11 years later, in December 2024, Bitcoin crossed $100,000. And the exact same people who warned others away at $1,000 were back, saying the exact same thing: too late. Except now, anyone who ignored them in 2013 and bought at $1,000 would have seen their investment grow 100-fold. Even someone who bought at what felt like the peak in 2017, when Bitcoin hit $20,000 and everyone said it was a bubble, would have quintupled their money by 2024. The mechanism behind this isn't stupidity. It's anchoring bias, one of the most studied phenomena in behavioral economics. When you first hear about an asset at a specific price, your brain locks onto that number as the reference point. Every price above it feels expensive, even if the fundamentals have completely changed. The person who first heard about Bitcoin at $100 can never see $1,000 as reasonable. The person who heard about it at $1,000 can never see $10,000 as rational. They're not evaluating the asset, they're defending their original reference point. This plays out in a predictable pattern. Bitcoin hit $100 in April 2013, and people said it was too late. It hit $1,000 8 months later, a tenfold increase. It crashed, then climbed to $10,000 in 2017. Too late again, they said. It dropped, then surged to $60,000 in 2021. Still too late. Now it's at $100,000, and the narrative hasn't changed. The warning never changes, no matter how wrong it was the last time. What makes this especially painful is that the returns have been extraordinary even for latecomers. Someone who bought Bitcoin in 2013 and held until the end of 2024 saw an average annual return of 105%. Someone who bought at the supposed peak in 2017 still more than quintupled their money by late 2024. The data shows that too late has been consistently wrong, but the feeling persists because human psychology doesn't update reference points easily. The people shouting too late aren't malicious. They're protecting themselves from regret. If they admit it's not too late now, they have to confront the fact that it wasn't too late when they first heard about it either, and that means acknowledging a missed opportunity. So instead, they double down. They warn others away, not because they'd analyzed the market, but because they need the price to stop rising so their original decision to stay out feels justified. This creates a strange paradox. The longer Bitcoin exists and the higher it climbs, the more people become convinced they missed it, even though the pattern shows that every previous too late moment was actually just another entry point. The trap isn't the price. It's the belief that your reference point is the only one that matters.